Welcome to this webcast where we will be looking at the Capital Markets Union, or CMU, which is a European initiative that promises to completely change the landscape of the European capital markets. I'm Peter Workman, a PwC Legal Corporate Partner, and I'm pleased to be joined for today's discussion by Kevin Desmond. Kevin is a Senior Director in PwC's Capital Markets team. Brian Polk. Brian is PwC's EMEA Financial Services Regulation Leader. And finally, Oliver Williams. Oliver is a PwC Legal Corporate Partner who specialises in private equity. So just to set the scene, the free flow of capital was one of the fundamental pillars on which the European Union was built. Given the current fragmented and underdeveloped state of the EU capital markets, it came as no surprise when President Juncker set out as one of his key priorities the need to build a true single market for capital, a capital markets union for all 28 member states. With Europe recovering after the financial crisis, the high-yield bond market growing, European IPO volumes healthy, why do we need a CMU at all?
I think one of the key answers to that is that we still don't have a single harmonised market throughout Europe. We have a number of disparate markets across a very potentially powerful economic bloc. And I think that if we can join those things up and unite them under a common standard, we'll have a very powerful economic force.
Okay. Brian, anything to add to that?
Yeah, I think that one of the things to keep in mind here, and which I think is quite important, is that Capital Markets Union is really a consumer-focused initiative, if you will. This will touch, citizens across the European Union in a way that things like, if we contrast it with banking union in Europe, which is consisted of a single supervisor for banks and a single resolution authority, neither of which really has any visibility with citizens. So I think that Capital Markets Union is in essence a really ambitious attempt to drive some improvements in capital markets that will increase choice, reduce costs for consumers, and ultimately drive kind of higher growth in Europe. That's the theory.
Okay. So what does it look like, Brian? What does the CMU project look like? What's the timetable? What's going to be involved?
Yeah, so Capital Markets Union is sort of an umbrella name, if you will, that's been given to a series of different initiatives that'll be rolled out over several years. There's an action plan from the Commission, which provides a first draft of their view on the likely timings. But they're starting with some of the things that they believe can be done quickly, that can generate some momentum behind the entire initiative. Feeling that if you can drive momentum behind things like a Prospectus Directive, like a securities market initiative, that will create improvements. Even if the securities market improvement is aimed at the banks themselves, that should free up their balance sheets to provide more lending at better prices to consumers. And ultimately, if you can create momentum in the short term, you can address some of the bigger, tougher to get at things, like harmonization of insolvency provisions across Europe, that will take longer to do.
Okay. So Kevin, we heard from Brian that the Prospectus Directive is an area that's been identified for early action. That's something you've been looking at? Have you got some thoughts on that?
Yes, indeed. It is certainly one of the ones that, because it already exists, if you like, it's relatively easy for the Commission to bring forward proposals, if you like, to evolve it rather than to create radical change in some of the areas that Brian mentioned, which may need addressing in the longer term. So it is something that the Commission can bring forward, has brought proposals forward to try and help really in two ways. One is to actually create an environment where investors can actually access instruments in a way that maybe isn't possible today across the whole of Europe. So making it easier for companies to issue more frequently, to reduce the burden, the regulatory cost of regular issuance through some form of annual registration document, importing ideas from other markets. The French do it a bit already. It's the sort of practice in North America, and seeing whether that helps. If more capital is issued, more people might invest. In the bond markets, it's looking at taking away the distinction between wholesale and retail debt. and creating one set of rules for all debt instruments in a way of trying to encourage retail investment to go into those sorts of instruments. The other side of the coin is actually helping SMEs raise capital, particularly as a particular focus of the Commission, where European companies have particularly struggled at that level to raise capital when you contrast with the markets in North America, where SMEs are much more active users of equity and debt capital markets than they are traditionally in Europe. What are the barriers to that? Some of those are actually around producing a prospectus that's 300 pages long that lawyers and accountants have spent hours checking over. Well, can we reduce some of that burden down? They've got ideas of it. Can you create a question and answer type document? Be interesting to see how those get developed by the regulators, because previous attempts at trying to reduce the level of disclosure, particularly for SMEs, has foundered really on the investor protection side of things. So more disclosure protects investors, so therefore why would you have less disclosure? And I think there's some discussions, and the evolution, that'd be very interesting to see how that comes through in the next year.
Yeah. So clearly there's a tension there between investor protection and a desire to make the process more streamlined and cost effective. Brian, any thoughts on how the balance might be struck there?
Well, I think where they draw the line is between safety and and returns is always kind of fascinating, and I think it's in Europe I think there's always the search for the zero risk high return product, and I think it bears some watching to see where ultimately where Parliament lands in Europe in terms of drawing those lines.
I mean, I think we've heard that the CME project is going to be both wide-ranging and long-running, and it's going to affect and provide opportunities for a number of stakeholders. And any thoughts, Ollie, on who might have some opportunities?
Yeah, I mean, I think it will be a tremendous opportunity potentially for the private equity community. I think it could really open up new areas for exit. I think if we've got a new regime whereby smaller or medium-sized enterprises can list with reduced disclosure standards, subject to what we talked about, investor protections, that should make a lot of exits of that sort possible to the extent funds want to do it. And we've also touched on the fact that there'll be a reopening of the securitisation market, which should help, with extending credit and should make things more liquid.
Any further thoughts, Brian?
Yeah, I think that one of the key areas for growth right now is FinTech companies, kind of new entrants to the financial services markets in Europe, companies that are using kind of digital media to provide services in innovative ways to customers, and to do it across borders for citizens and businesses in Europe, their customers. And so I think allied with the Capital Markets Union, there's the Digital Single Market Initiative in Europe, and between the two of them, kind of aiming to try to make it more easy for some of these startup ventures to operate in a cross-border fashion in Europe, and really provide benefits ultimately to the users of financial services.
Yeah.
And building on that, really reiterating the point you made earlier, this is actually about the consumers in Europe, the citizens of Europe, having access to investments opportunities to save for their old age, to pay for their insurance products, and access to capital for companies who are trying to create employment in that space. Europe needs to create employment. There's 300 million people that need to work and earn a living, and small and medium-sized enterprises are part of that solution. And enabling them to access capital to grow, to develop their businesses, has to be a good thing for all of us.
So thanks everyone, some really interesting insights there. To summarise, some of the benefits of a stronger, more integrated European capital market are clear. Europe's businesses would have greater choices when it comes to funding to help them invest and grow. Those saving for old age would be assisted. And perhaps most importantly, by reducing the reliance on bank funding, this would help the financial system to be more resilient in the event of another downturn or financial crisis. Thank you for joining us for today's discussion on the Capital Markets Union. As you have heard today, the CMU reforms will be both wide-ranging and long-running. We will be monitoring developments as they happen, and we will be holding more of these panel sessions to dig deeper on certain areas. Our next session will look at the proposed changes to the securitisations market.